Well, hopefully everybody had a good weekend. We've got a lot of auctions today. The 2 and the 5 are on the table. These are likely to be impactful within the market. So it's important to recognize that even if FX Street shows a lack of anticipated impact, these are the 2 and the 5-year notes. So we need to pay attention to them. As we do every morning, we want to start out with the look around the world, make sure there was no serious event that may carry over into today's market. Most of the time there won't be, right? Just want to take a look and make sure. Using Financial Juice, it's where you can also identify who may be speaking today. Just keep in mind that it's not going to always cover everybody, right? If somebody drops in on Fox News, like one of the Fed speakers did when we hit 20% downturn in the market, he just showed up there. He wasn't on the books. And I mean, hell, I don't sit around watching Fox. So didn't see him coming until he was already chipping his teeth, and his remarks were showing up on FX Street and here on Finance Juice. So, you know, just because they're not on the list here doesn't mean that they can't end up talking somewhere. So what we're looking at for the European market wrap is that it's the MOTs, the monsters of tech. It is the big dogs that are doing well this morning. Heavyweights, Amazon, Apple, Microsoft, tech stocks are boosted by in the European and Asian indexes. Asia did really good, and Europe behind that been doing really good in the overnight. So we're looking for this to carry through. In my readings over the weekend, everything looks like a good 3 to 5 week rip to the upside. That can always get shut down, of course, right? There's no guarantee to anything, but it really looks like we're in a rotation off of these lows, and this is looking like part of that continuation from Friday. All right, so like we do every time, we want to come over to Think or Swim and look at. We want to look at the calendar. I always like to show this screen so that if somebody is doing some intraday research, say you want to go back to December 11 of last year and look at the intraday chart, and you're trying to figure out if there was any economic news that day that moved those intraday candles, you could go back to the morning briefing from that day, catch the first 5 minutes of the briefing and see this screen, and you would see what was the economics on the table that day. I can't tell you how useful that is just in my own research of going back to those previous days. So we always want to bring this screen up 8:30, 10, 10:30, 11:30, 1 o'clock. Once we get past 1 o'clock, we're pretty much done. There are some European central bankers, and I mean, we can see, Christine Lagarde is supposed to speak today as well at 1:30. So, there are some speakers later, but no more auctions or any other econ on the table for the rest of the day past these. Someone was asking if the weekly expected move is working on equities on a daily chart right now. Here's Apple on a daily chart with the weekly expected move. It seems like it's working to me. So if yours isn't working, I don't know what to tell you. Maybe delete it and reinstall it. We have a lot of markets right now with a bullish signal. And I've had a lot of people asking about this. Like, hey, I see a double bottom, or I see all these bullish signals, and the double bottom has been the one I've heard the most. Just you got to keep in mind, everybody, that when you look at a candle chart, you can, like a lawyer, you can argue both sides most of the time, right? You can give a bullish argument and say, well, because of these things right here, I see a bullish signal, or you can give a bearish argument, and because of the things you see, you could give it a bearish argument. On either side of that, the pattern is the last thing that we use to make a decision. So if you're just flipping through charts and you see a bullish signal off of these lows after this amazing beatdown that we've had in the market, and you just think, well, there's my long signal, and you don't take anything else into account except for that long signal, you're going to get hurt more often than not. The pattern is the last bit of information. It's not the place to start, it's the place to finish. In the last 2 weeks, I've had a lot of people showing me trades that they're in and asking, hey, what should I do with this? I'm getting killed. I took this trade off of that double bottom and it fell through the double bottom and we're getting hurt. And I don't understand why the trade didn't work. Wasn't that a good signal? It looked like it was a head and shoulders, or it looked like it was a flag or whatever. The pattern is the last thing, right? Kind of keep that in mind. Bring that back to the front of all of your analysis. That little statement. All right, so for this morning, 40.20 is the ADR to the top side. 39.68 is half the ADR. 38.62 is half to the downside. And 38.11, I'll just cheat that a little bit. 38.11, which is the COG line, is the ADR to the downside. We did finally get out of the box. But we are not yet done. We have still a bigger box. We've seen this movie before, right? That's usually the way it's mentioned. So for this morning, we are outside the box. We're outside of yesterday's range. So we are on an inside day breakout. Everything so far points to this breakout sticking or holding. So we're going to be looking for a continuation of this average daily range, the ADR. We're up 0.5%. We've got to absorb all of the weekend news, so that all of that needs to be priced in. There's always three ways to approach this market, right? That it's going to be range bound, that it's going to break out and make a run to the upside, or that it's going to break out and make a run to the downside. To break out of the downside at this point, it would have to get to yesterday's low, break out from yesterday's low, and then make an expansion move beyond yesterday's low. As you can imagine, that would be a very, very bearish situation, and half the day is already done. So while I won't say that we can't do that, I would argue that that's the least likely scenario at this point. With all of the news and all of the positive sentiment in the market this morning and the carryover from Europe and Asia, it's very unlikely to see that bearish run without some extraneous news really galvanizing an explosive move in that direction. So it won't be subtle. It shouldn't sneak past you. There's absolutely no way that it would just be a slow grind down to that level. We would see it as like a bidless beast, nothing but red candles, no pullbacks, nobody taking profit, and just an absolute rip to the downside. And I don't see that on the table today. So unless news comes out that causes a move like that, a downside move and breaking out of yesterday's low is the least likely scenario. So what's next on the table? Well, a more likely scenario after such an expansive move on Friday is that we just maintain the range today. That we really don't do much. We're up 0.5%. The market would consider that a great outcome for the day, and we could do nothing more than just maintain this range between our own Globex low and our Globex high for the day, and call it a done day. The third scenario is that we're likely to see a continuation to the upside today, that we would reclaim our Globex high, break through that high, and start working on the ADR. If we were to get a continuing move that looks like yesterday, another trend day, then we could get one of those record setting bear market rally days where a 4 or even a 4.5% move uh, is seen as just another day. So if this orange bar there is 2.69, then let's just add another 1.4 to that and see what a 4% move on the day would look like. So we got two, we're going to call it 2.7. So let's add 1.3 to that. 1.3 would be 40.75. That would give us a total of a 4% move to the upside. And that is for today. And if you're looking at that number and you're thinking, no way, man, you're reaching, that's too far away. It's not too far away. It absolutely is within our boundaries, because during bear markets are where the biggest moves in one day are on record, right? So it's completely within our reach. Is it likely? I wouldn't want to put any weight on it. I would say that the orange line at 40.20 is much more likely. All right, so we're looking at a volume profile for 10 days. It's a 30-minute time frame. We are well outside the box, very far away from the point of control, very far away from the value area high and low. There is a little bit of volume support at 3,900, but other than that, if we were to begin rolling over, say we break our own Globex low, there's nothing to really catch us before we're back down to the value area high again. I have a mix of longs and shorts. And while I am not bullish in any way, I will play what we have, right? Short duration expansions to the upside, continuation of shorts to the downside. Just keep in mind, we're one market month away from the start of a new earnings session, right? And the banks just last week started trying to lower people's expectations, right? They've already started trying to imply that things may not be so rosy and wonderful when it comes time for earnings. So we'll see, right? We're going to see this market really start to bring earnings in front and center within the next few weeks as they get ready for that. Then you've got CPI, and then you've got the Fed in July. So I mean, I've got a list of big things for July. June 8, you got the June jobs report. So July 8, we got the June jobs. July 13th, we've got the CPI. July 15th, we've got second quarter earnings season kicking off. And remember, they still want to destroy EPS guidance, and they haven't been able to really tamp that down yet. On the 27th, we got the FOMC meeting, and then on the 28th, we got advanced GDP, advanced estimate GDP for Q2. But between now and then, we've got a lot of short covering that could happen. We've still got that 3,600 JP Morgan short put strike at 36.20. And we've got the 630 long put strike from JP Morgan at 42.85, right? So those are going to expire in 3 days. Get that out of the way. Between now and, say, landing on the other side of the 4th of July, say into the second week, maybe into OPEX the third week, right? Third Friday of the month is the 15th. That'd be July 15th. You're looking at a good 2 weeks where we could just rally across the board. Obviously, we don't want to just go out and start buying a bunch of stuff, right? The rally is on the table. A short duration, short term rally is on the table. But we still got to see signals of that first. We had the flow Friday, but we didn't have the market breadth confirming it. So we very well could see this continuation of volume today, but without market breadth backing it up, that it's going to be a chase, right? I don't have a better word for that. That's not my word, by the way. It's but it's the one that fits. So, here from Tier 1 research, right? I always try to point out where the information is coming from. From Tier 1 research, equities having sharply underperformed month to date and quarter to date. It's one of the larger rebalancing to hit the markets in a while, depending on the source and the estimate. Roughly 100 billion of U.S. equities must be purchased over the next 5 days. International equities have about 60. I'll just round it up a little bit. Bonds should see the same equivalent on the sell side. You got a backdrop of negative dealer gamma with the potential for upside fireworks. Late month rebalancing looks very much like March and May of 2022. Even though the volume might follow through on Monday, the breadth has not confirmed. So don't just blindly hold short unless you've got the duration already chosen, right? I mean, if you're holding like November puts or something, then yeah, you're good. I mean, by all means, don't dump them, but hang on. You might hold through a little bit of pain. All right, so Bitcoin failed to break, couldn't hold it, dumped back down. Bonds sitting at those lows. Didn't we just mention bonds taking the opposite side? Right? Yep, we did mention that. We are below the VWAP in the bonds. We're off of that high, but not by much. Be careful with that low in the bonds. If it's a liquidation break and the start of the drop, then that's fine. But a lot of times you'll get a market that consolidates to draw people in. That's why we call it the draw. And then you'll get the raid into liquidity before the run, right? So if that's a liquidity raid, then we could see the VWAP crossover and bonds attempting to re-challenge the 135. There's a lot of auctions today on the bonds. I would not be surprised if the bonds just kind of hold out until that auction today. Be very, very present today at 11 o'clock when these auctions come in. I know that they don't show up as impactful. If you look on places that talk about economic data, it's always the job numbers and things like that. Those are the sexy economic events that get everybody's attention. I pay attention to those auctions, if there are any, every single day that we have them. Uh, what's it cost you? A few minutes of looking at the clock at 11 a.m. or at noon or at 1 and just being ready for a reversal in the market. So be ready for that today. The S&P and the NASDAQ are both tangled up on their VWAP. So we're above it just slightly, but I mean, we're tangled up in it. We're not expanded away from it like we were, say, on Friday. Oil also is above that VWAP, and we're coming up now into a triple top. Remember that if we do see an explosion in oil or the dollar, or if we see a significant, nasty drop in the bonds, then we could just shut that entire argument down for any kind of rally in the S&P and the NASDAQ or any kind of bullish case for the next 2 weeks, right? That whole argument just gets wadded up and thrown out the window. So it's a part of why we watch these different markets. TRB and the dollar this morning, it is back inside the range. We had an inside day breakout with that liquidation to the downside, but it came back in. We want to see this thing just kind of calm down and relax. We don't want this thing making exaggerated moves. If it stays below 105, we'll stay bullish in the market. That's going to be our benchmark there, right? And we're not talking about today like, oh, well, we're below 104, so I'm just going to go buy an ES futures contract. No, no, no. That's not what we're talking about, right? We're talking about across the board, looking at equities, making that discussion of short duration swings to the upside. If the dollar is maintaining below the 105, there's an argument to be made for short term bullish rallies in a lot of the oversold, although I hate that word, a lot of the beat down markets right now, right? So the dollar is a little bit of that benchmark. You can try to use the VIX for the same kind of benchmark, say if we stay below 30, but the VIX has been such an unreliable tool this year that I don't really want to try to handicap anything by using the VIX. And then for the bond, let's just see how those auctions go for the bonds. Uh, again, Bitcoin did fail to break out. We're not looking for a correlated market state with Bitcoin. It's not why we're looking at it. It is pure speculation. So when we see that thing getting bid up, we look at it as a gauge for a risk on sentiment. Are people feeling froggy? Are they getting risky? Are they ready to happy with that warm, fuzzy feeling? Then we'll see the Bitcoin continue to bid up. But if they're nervous, if they're scared, if they're in any way hesitating about what they see in the market today, they start dumping that, then that kind of brings in the argument for a risk off sentiment, right? So just a nice little gauge. If this is the start of a good 2-week bull run, and we want to take a look at the fangs, they're going to be one of the best indicators that you can use to one to validate those things, but also probably to trade that, right? We want to focus on high beta names. We already know that the S&P is going to focus on, a good 2.5% moves. But what could we get, say, from something with a 2 or a 3 fast beta, right? That way we get a 2% in the S&P, but maybe we get a 6% move in Tesla or something equivalent to that. Right now, Tesla, for an example, has got a 5.7 average daily range. So in the pre-market this morning, Tesla is up, right? We are inside day breakout already. So we're going to be focusing on, can it hold, and looking for a continuation. It would be really nice if we went into the open and it dropped down and bounced off of yesterday's high. But I don't think we're going to get such a gift as that. Instead, we want to focus on seeing Tesla break above the Globex high and make a run to the upside. There is a pivot point, just a line picked off of the high of day from Thursday, a few Thursdays back. That would complete this like a micro cup. We don't have a handle on that cup yet, but it would complete that cup. The 30-minute 10-day doesn't get us back far enough, so let's try a 20-day 1 hour. When we go to the 20-day 1 hour, which is what I tend to use when I'm looking more for swing trades, you can see that we're still sitting inside the volume profile. The point of control is below us. We're moving farther away from it, and we're moving towards the value area high. That Thursday high that I pointed out is above the last of the volume resistance, which is basically seems like what we hit here in the Globex this morning. All of that. So 750. If we can get above 750, we pretty much have clear sailing, at least from the volume point of view. The weekly expected move is 789 and some change, so we might as well just say 790. Right? There's no reason to quibble over 11 cents. 790 is easier to remember, and it brings us really close to this structural level back here. So right below 800. Tesla right now has got an additional 1.8% market maker move. People always get confused about where this market maker move comes from. If you don't speak nerd, this is what we call the front, and this is what we call the back. And you will see a market maker move when the front gets higher than the back. I've heard that explained incorrectly from a number of people that normally know exactly what they're talking about. On that one, they just screw it all up, and it's like they're talking out of the side of their head. If you want to learn more about the market maker move, go to the ticker tape. It's a publication by TD Ameritrade where there's article after article after article that talks about what the market maker move is, what it was designed for, where the math comes in, all of that, right? So you don't have to take some Joe Schmo's word for it, especially if they're telling you that the market maker move is something than what I just told you that it is. And it's not because I know it all. I certainly do not. I don't know it all. It's because I went to the place where it was created. Market maker move doesn't exist on other platforms because the entire logic of it was brought in from Tom Sosnoff and his team when they owned Thinkorswim. And then they sold it to TD Ameritrade. TD Ameritrade started publishing articles on it in their blog for the ticker tape. There's like 50 different articles in here that goes through. And of course, you don't have to read them all because they're not all telling you exactly what it is. But these different articles lean into how it was used or uh, how they have used it before, how you can use it going forward, all kinds of things to go with it. Right? This is a lot of how I learn about Thinkorswim. Those weird, odd little things that Thinkorswim does that leaves us all kind of questioning the ticker tape. It's a really great resource and it's free. Free, free, free. All right, so an expansion above 755 or the Globex high, we would be looking for 770 and beyond. There is that resistance that we had talked about. What? There we go. Microsoft, another one, is part of the MOTs, right? The monsters of tech. Consistent, persistent move to the upside in the last few days. Look at it on that higher time frame. You can see that we made it through trend line breakover. Very nice expansion move on Friday. Nice gap up of that bear market pennant or bear pennant breakout with a nice follow through. Overhead resistance at 275 ish. It'd be this next zone or next area or range. Plenty of room between us right now and that location. If we get above 275, then it's a run towards 290. Notice looking at the 1 hour, 20-day, that the point of control is over our head. So there's a significant level of resistance at 270. We'll call it 272 and a quarter. If we can get through that, then the value area high is at 277.7. It's a lot of sevens. Apple, same thing. We are in the middle of the volume profile. Point of control is over our head. There's some resistance at the 145-ish, 145.60 area. And then the point of control is at 148.5. So those are going to be areas of contention and resistance overhead. On Apple, we also have that trend line breakover. Let's go out to a regular chart. I think we hit the 50 period on Friday and didn't manage to break through it. So this morning we're going to be looking for a resolution of that 50 period daily moving average. One nice thing that Thinkorswim offers is the idea that you can plot these daily moving averages on an intraday chart. I'm going to make it really big and glaringly obvious. I guess it wasn't the 50, or it wasn't Apple where I saw the 50. So that you I'll have to circle back and see. Maybe it was Microsoft. One of them failed. There it is. Microsoft did it. So Microsoft hit that 50 on Friday and did not break through it on Friday. And what you often see is if a market hits a major moving average on the intraday and fails to get through it, it often sneaks across the line in the middle of the night. I've always loved that little analogy, but it seems to fit. And that's exactly what we have this morning. Microsoft on Friday hit that line and couldn't make it through. In the overnight hours, when nobody was looking, it sneaked across the line. So now the old resistance is anticipated to be the new support. Look for that 50 to help hold the market there. Now, that doesn't mean that Microsoft can't wick through that thing, right? See a 15-minute candle drop back down below the 50 because we can dance around that as a line in the sand. But what we're looking for is an expansion beyond it. So don't freak out if the market just crosses below the line. That's not enough. We may crisscross that line multiple times because while I'm using an SMA, somebody else may be using an EMA and somebody else might have a whole MA. There's a lot of different MAs out there, right? But they're going to be pretty close together. So Microsoft's looking to resolve that 50. Now we can look at Apple and recognize that the TRB, at least the higher one from back here, is still over our head a ways. If we're looking at swing high, swing low, then we've got our swing low in and we had our swing high, but this is not yet a swing high because we would have to pull back from it first to be able to say that that's a swing high. So right now we're just coming up off of that low, and that's what we have. But that is the rotation that we've been having. And of course, we have to be concerned that it will stall out and not make the same considerable distance in the swing. So 145 in Apple seems to be as a part of this swing high, swing low. It seems to be the area that we want to focus on at the moment. If we happen to get above 145, then watch that 50 period moving average. Right now, Apple is about 3% above the 10-day moving average. And that's getting into not yet extreme, but it's starting to touch the line of being too far away. It's still got plenty of room. Nobody's saying that it's gone too far too fast. Yeah, you can see that it has an average of at least 4 and maybe even 5% away from that 10 period before it starts to slow down, pull back, turn over, and go back towards that 10. So it's not outstretched too far yet. And that's an important thing to consider, not just for Apple, but for a lot of those names that made that big move Friday. Was the big move Friday too much? Was it too big? That's a great way to be able to answer that question. How far away from the 10 are we? Same thing with Meta, 2% above the 10. 2% is nothing for Meta. Oftentimes it gets 5 and 6% away from the 10. So it's not overbought. It didn't get overstretched. It didn't run too far Friday. We do have that 50 period overhead to be concerned about. And on this one, we actually are not having the breakout that a lot of the other markets already had. Right? A lot of the other fangs had these same gaps, the same pennant, the same wedge, but have already broke out of it and are already way up here. So the fact that Facebook is not having already broken and done that kind of implies either one of two things: that it isn't going to, or that it's just late to the game and it has not yet. So with Facebook, you may want to wait on it and see if it can get above that 172 half first. It hit it here in the pre-market. If we do get above it, watch the 180.5. That's the 200 period moving average. It's likely to be the next area of resistance, and it also ties in with this pivot point from 524 from May 24. All right, Nvidia, same pattern, same setup, same argument, same discussion, same everything. The same bear pennant, and with Nvidia, it started the breakout and it closed above, but compared to its peers within that MOT group, this also is behind the curve and not even close to the way Apple looked or Microsoft, right? So with this one, 175 is the next area of resistance. That would be the start of this gap. So 175, if we get through that, then the top of the gap at 180 half. And that would put us right in with the daily 50. Nvidia is only 2.7% above the 10, and it has a history of going between 7 and 10% away from the 10. So it's got plenty of movement to the upside before we even have to be concerned about having gone too far. $26 on NIO is the next resistance point that we need to be concerned about. The 50 period daily on AMD is the next area of concern. That's 93.12. We had a beautiful red to green on Friday. Now we just need to see it as a continuation, right? It needs to pull through and come across onto the other side. Watch for 90 to be a significant area of resistance today. GameStop, AMC, Tesla, JP Morgan, Wish, AMD, Apple, EWI, and Microsoft. And all of those names were from June 26th at 5 o'clock at night, right? So we're going to be, those were the top names mentioned over the weekend. We want to be keeping our eye on those. I don't go over and read the message boards on Wall Street bets, but a little headline like that can just fill me in on what's going on this morning, right? That's what I got for you guys. Be careful, be safe. I will see you all in the stock and options room at 9:15.